Well, hello to all of you, and wonderful to have you all online. I'm actually sitting here in Bombay, in Mumbai, and we're in one of the fancy Taj Mahal hotels. We're actually having a meeting here, and anyway, so I've stepped out to join Linden for the webinar. So wonderful to have you online, Linden. Whereabouts in the world are you at the moment?
Yeah, I'm actually in Knysna, a beautiful resort town on the south coast of South Africa, and I brought my color today. I'm feeling cheerful, so I'm in bright, resplendent blue.
Well, fantastic. So it's wonderful to have you online. We really, what is WealthE Wednesday for us? WealthE Wednesday is a conversation. It's a communication. It's a joining and being part of the, community and figuring out how we can add more value. We're going to have conversations around property, around people, around profit, purpose, and hopefully have a bit of fun during the whole conversation. So what I wanted to do quickly is just run through what the agenda is in terms of what we're doing. So one of the major things in terms of us as a team is always wanting to be able to meet the team. If you're wanting to understand who we are and what we do, then we can explain that in more detail. You can also come and ask us anything you'd like to know about the platform, due diligence, the past and the present deals, the opportunity to come and learn about the current deals, and even the pipeline of what's coming up. Be able to ask questions. And I tend to joke with people, it's a bit like an open house for an estate agent. And then, as a team, we're always looking to talk about the enhancements and what's happening with the platform. So the way that we've designed it and the way that we've, decided to do this is that in the lunchtime session, which is the one that we're doing right now, we're going to spend more time on this part of the webinar. And then this evening, we're going to spend less time on this part of the webinar and more time on the bonus session, which is where we're going to look at how to not only survive, but thrive in a crash. There's a lot of talk around the world, depending on who you speak to. Interest rates are being dropped. Just today, interest rates were dropped in New Zealand. Last week, they were dropped in America. People are starting to say, where's the world going and what do we do about it? And how are we going to make sure that we, have a plan in place, for an economic change? And so without further ado, I'd like to get started. Again, the intention is that if you are a regular investor, then the lunchtime session is always going to be more of an introductory session where we're going to be explaining who we are and what we do in a bit more detail. And then the one in the evening is where we will have less of the introductory and about the platform and how to do it, etc., and more in terms of actually going into detail and asking questions, etc. I would like to say though, if you want to let us know where you are, just so that you can see where the little question box is, you can literally go into the question box and you can type in where you are and let us know where in the world you're joining us from. As I said to you, I'm in Mumbai, India, and what is really here in India, and we got a very awesome reception. So it's really quite interesting how this message is carrying across the world. So what I'd like to do just quickly, and if you look in the top right corner, you've got the little question box. So do me a favor, go to the question box and just type in where you're from so that you can figure out how to use the question box, and also that I can see if you're paying attention or not. And then what will also be interesting is that if you've got any questions, just fire them through. I'm only working off one laptop. And so Linden, I'm not sure, can you see the questions as well?
Sorry, Scott, I can't, but Lee has joined us. And welcome, Lee. Great to have you on board. Lee is our head of community, and Lee will be monitoring all the questions for us today.
Oh, fantastic. Okay, welcome, Lee.
Yeah, hi, everybody.
So where's Lee? Lee's normally based in Dubai, but in Johannesburg today. Thank you.
Yes, I'm in Johannesburg. I am blessed to be visiting family, be able to combine a bit of work with pleasure. And surprisingly, it is not as cold as I thought it was going to be. So welcome to everyone. I look forward to an action-packed webinar.
Wonderful. Well, thank you for the people that have put through where they're from. We've got people in America, we've got people in Austria, we've got people in South Africa, people in the UK. You got me in Mumbai. So we got people from all over the world, which is the power of technology in terms of where we're going. So, right, let's rock and roll. And as I said to you, for the lunchtime session, we want to, almost take it that it's more for people that are trying to understand who we are and what we do and how it all works. So let's rock and roll quickly. Why are we doing these WealthE Wednesdays, and why do we do what we do? Really, it's based on Zig Ziglar's principle. You can have anything you want in life if you help enough other people get what they want. And really, our intention is to add as much value to people, to educate them. to be able to share with them the different opportunities so that they too can create the freedom that they want in their life, which is really, quite important in terms of, one of the deep passions in terms of who we are and what we do. I'm a big believer, and I've, in the last couple of weeks, I've been doing events all around the world, and we had a roadshow around South Africa, and obviously we've just done this event in India. And what's been really interesting is that most people in life focus on what they need to do and how to do it. They spend all their attention and their time what and how, but they don't get clear on their why. And so for me, it's always very important to start with the why. It's what we tend to refer to people, it's the top of the mountain. And once you get clear on the top of the mountain and which mountain you're going to climb, then you can start to worry about the how and the what. So when you get clear on the why, then you can figure out the how and ultimately the what. And so in terms of our why, this is a picture of me and my dad. I was 13 years old. It was my first property project. And my dad did what we were all taught to do. He went to school, he went to university, he got a great job. He ultimately became financial director of a listed company. He trusted the financial industry. He invested, he paid his taxes. And unfortunately, on the 1st of August, 2005, my dad actually passed away broke. Now, that had a profound impact on me and my life. And the reason being is that when we did the research, 94% of people, pretty much all of us on this call, statistically, 94% of us will join my father. They'll either be broke, dead, or reliant on the government by the age of 65. What's fascinating is that the other 5% will be financially independent, which according to the financial industry is where you earn 25% less than your last paycheck, which, in my mind is just 25% poorer. And so at a young age, I looked at it and I thought, this is ridiculous. Like, we have to do this differently. Why is only 1% of us, literally 1% of us, when everyone's working their best and trying to achieve everything in their lives, literally 1% of us are actually winning. You marry that together with a love of computers, and at the age of 6, I was programming a computer. This is a Commodore 64, and programming a little turtle in Logo. And what we've been trying to do for literally a lifetime is to marry together the property and technology industry. And some people, I tend to joke, but we've got the game of Monopoly, and people love the game of Monopoly. And we always said to ourselves, why can't we play Monopoly in real life? Why can we not get access to the best property opportunities around the world in real life? And then you add to it the greatest challenge on the planet. I'm here in Mumbai. I'm in one of the fanciest hotels in the city, and right down in the very colonial areas. And yet there's abject poverty here in Mumbai, just like there is in Africa. And it's known as the wealth gap or income inequality, and it's just getting worse. The top 1% owns more than the 50% of the world's wealth. Back in the early 1970s, it was only 24%. And so this differential is getting worse and worse. And where you were born geographically, if you were born in North America or Europe or Australasia or Japan, you were better off. But if you're born anywhere else, supposedly statistically, then you had a challenge. If you're a female, unfortunately, less than 10% of ladies are actually billionaires. And I've read reports as stark as less than 1% of all the world's wealth is held by females. Now, whether it's right or not is quite frankly irrelevant. We can all safely say that it's not equal. And then, if you were a millennial, unfortunately, you were just born in the wrong time in terms of the big picture and the problem of what is actually happening. So when I asked people, are you part of the 1%? I actually got given some research literally this week. And depending on where you are in the world, you can now see whether you're part of the top 1%. So I put this up in India last night in Mumbai. And as you can see, India is $81,000, and that makes you part of the top 1% in India. But what was interesting is that when I asked them, how many people, would consider themselves part of the top 1%, many people put up their hands. And yet when I asked how many of them have invested in medical buildings, very few of them, in fact, not one of them put up their hand. And what's interesting for me is that sometimes you might have the income which represents that you're part of the top 1%. But the question I have for you is, are you investing like the top 1%? Are you investing with the mindset of what the top 1% are investing in? And that's really when we looked at the research, 49% of the world's wealth is held in real estate. Only 12.9% of the world's population has access to that real estate. Of that 12.9%, you and me, less than 1% of us actually get wealthy by the age of 65. And we decided to change that. We decided to use technology to allow the 99%, to allow you and I to be able to invest like the top 1% in the same caliber and quality of assets. Our vision is to make investing as simple as a swipe of a finger, and ultimately to get it to $1. You know, really from our perspective, you know, there's 3.5 billion people on the planet that earn less than $2 a day, and we want to truly be able to empower the 99%. Now, we're not. Are you guys there?
Yep, we can hear you. Keep going.
Okay, great. Sorry, I just saw an internet connection. You know, we're not at $1 yet. We're still helping the middle class, the professionals, and the high net worth individuals invest. We're not down to $1 yet. But what I do believe is really exciting on WealthE Wednesday is that this is our day when we drop the minimums down so that people can participate. So rather than it being $5,000 or $10,000, we actually drop it down to $1,000 so that more and more people can participate. But we literally only open the platform for 24 hours so that people can participate and get more access in terms of where the world is going. You know, when one looks at the system, you know, no matter where you are in the world, whether you're in Mumbai or whether you're in New York or whether you're in Shanghai, the system is broken. You know, between yourself, the investor, and your investment, there are actually 16 different middlemen. There are a whole bunch of fees. There's no trust, there's no transparency, and because of those high fees, there's very low alignment in terms of the big picture, and that's why we're getting the results that we're getting, that we've already spoken of. We decided to change that. We decided to make it easy for people. We decided to go out and find trusted partners on the ground. You know, this, as an example, is a trusted partner that does residential buildings in London. They then list a property on the platform. You and I, as global investors, then get access to those opportunities. And then the fourth stage is that we actually can invest. And it's literally 4 simple steps. We can sign up in a compliant way and view the properties. We can select an investment. So I want to be very clear here. We're not financial advisors. We don't give financial advice. But what we do is give people the information so that they can make the right decisions for themselves. They can then transact online, and ultimately they can manage their entire global portfolio in one place. And in simple terms, it's a traditional marketplace. It's putting the investors directly in contact with trusted partners in England, Australia, and America. You know, we've got an extensive team, and I don't have time today to go into all the details, but we've got an extensive team which is a combination between technology and real estate or property, but also geographically dispersed across 5 different continents, with also different advisors in terms of where we're at. We've got people that are in the tech space, we've got people in the investment banking space, we've got people in the compliance space, you know, et cetera, et cetera, et cetera. And so it's a really comprehensive team that we've managed to build that has ultimately helped us get our results. But what I'm really, you know, proud of, and what I'm grateful for with both our team and our community, is that what used to be very difficult, you know, when you used to invest in property, whether it was local or international, it was extremely difficult. There were many hassles, management, maintenance. If you went internationally, you had to deal with tax structuring and compliance. That's all gone away now. Now, literally, people can truly get access to the best partners with the best opportunities. They can invest from $1,000 and literally do it in a couple of minutes from their couch or, you know, their home. And what I love about it most now is that people can really just look at the best returns. You know, they can focus on the best returns in terms of where it's going. So this is quite an interesting one for me, because people talk about the track record. And what I would suggest you do is you can literally go into our platform and you can actually go and read all about our track record. So you can go and you can see in terms of our track record and the different deals. You can go in and see, you know, how they've done in terms of the historical performance and the different deals and what is actually happening. And I mean, if I give you an example here, I'm just going to close this little page down because I've got a whole bunch of slides open from an event that I did this weekend. Some numbers here. It was really interesting. When I was in Mumbai last night doing this event, you know, people talk about returns and they talk about yields, and there's quite a big difference between a yield and a cash-on-cash return, because a yield is what you're getting before your mortgage expenses and other expenses, whereas a cash-on-cash return is your net return after all expenses. So you can see here there was a medical building that we bought back in 2014. It was 7 different buildings. You can see 7 buildings. It was a $16 million deal, about a $6 million investment. The projected return was 8%, 8.3% per annum. And we've actually paid out 9.75% per annum for the last 5 years. This building here, and sorry, just a matter of interest, that's actually an income return. If you take the capital growth into account, the internal rate of return is closer to 15, 16%. If you take medical 2, this has actually paid out a cash-on-cash return of over 10% over the last 4.5 years. And actually, both of those buildings have just been exited. So we've done the full circle where we've actually bought them, we've held them, we've earned the income from them, and we're actually now selling them on a 5-year view. You know, you can see this one here is another building at 8.23%. This one's 8.18%. And, you know, I can keep going. And one of the things that's also important when it comes to the track record is that it doesn't always work. If you've ever been involved in property or business, you'll know that over a long period of time, not everything goes according to plan. And that's why I always say to people, you shouldn't only invest for what happens when it's working. You should invest with partners for how they behave when it's not working. You know, a good example is this development in Australia, where we invested, we bought the land, we had all the planning permission and everything in place. It was going to be a 50-unit building. And then what actually happened is that the Chinese government changed the regulation. And because of that, the banking regulation changed in Australia. And so we've had to repurpose this entire development. And we've actually effectively kicked the developer out, and we've had to go and redo the entire scheme. What's important is that none of the investors have lost their capital. But obviously we have lost from an opportunity cost perspective. And so it doesn't always go according to plan. But what you need to do is that the majority of them do go according to plan. But it's important to understand that you are investing in property. This was another one in a multifamily, which was in America. And in the beginning, the projections were not hitting, the actuals were not hitting the projections. And so we went in and we worked really hard with a partner on the ground, and they've really managed to pull this property around, and now the projections or the targets are actually over the projections, and it's actually catching up in terms of the delays of what actually happened in terms of those numbers. So I just wanted to give you some ideas, and you can actually go and read all about it. It's on the it's on the platform basically. So if I go back to the presentation I was giving you, you know, that just gives you an idea of our track record. But you know, what's also interesting is that we've got members now in 133 countries. We've done over $565 million. We've had $90 million go through the platform. We've paid out over $8 million in dividends. We've won a whole bunch of awards. But the one that I'm probably proudest of is that we've got a higher than 70% reinvestment rate in terms of actual investors reinvesting into the deals. And you know, for me, that is really a sign of something that we must be doing right. And I think one of the things that I'd like to do, and that Linden has joined us now, is that for those investors that are here, there's 2 parts of Linden that I think are relevant. One is the current deals, and 2 is the updated UX. And what I'd like to do, I can either do it or you can do it, but I'd love to, because this is the lunchtime session where we want to go into more detail around how the platform actually works, and actually go and look at some of the deals and maybe talk through some of the risk analysis and stuff. Do you want to drive that, or do you want me to drive it? Linden?
Sorry, I was muted. I've done that a few times today, so apologies for that. I just want to make sure, I think, Scott, on your side, you might just need to give me control or the ability to share my screen, and then I'll happily do it from my side.
Cool. So I'm giving you the screen now. So what I'd like you to run through, I'm just going to go and I need to just go and get them to get me an adapter because my power is going to run out. But what I'd like you to run through, if you don't mind, is if you can take people to how do they sign up, to take them through that process, and then let's go and look at some of the deals. I'd like you and me to talk through some of the deals so that people can get a better feel for the different deals that are available today. And then, you know, hopefully we can actually go through the process of maybe, you know, actually signing up and you know, committing to a deal, you know.
Absolutely, no problem. Can I just confirm, can you see my screen?
We've got you loud and clear. So I'm going to duck.
Right,
I'll be back in about a minute. I'm just going to go and get the power sorted, okay?
Sure, no worries. So welcome, everyone. If you log on to our website, www.wealthmigrate.com, as you see it in front of you, you will see that there is, you can certainly have a look at it. In the top right-hand side, there's the button that says sign in or become an investor. If you already are a member, I'm sure you understand, you can just sign in. You click on the sign in button, enter your email and password, and we'll take you in. Since our technology has had major updates and upgrades over the last 4 to 5 months, there are a whole bunch of information here that relates specifically to the new technology. If you are a brand new investor, you hit the sign up button. It will prompt you for an email and a password. It'll give you an option to opt in or out of different marketing. If you'd like to, for example, receive our newsletters that give you information on new deals that have landed or deals that are closing, any of that information, you opt in and click on the button. Once you've got that, it'll bring you through to our landing page, the first page you see, which is the Wealth Migrate platform. This is behind your password and login, and it is a secure site. And because of that, you are now able to actually see the deals that we currently have available. So if you are a first-time investor, it might ask you to complete your profile. We often get asked by people, why do you have to complete, why do we have to verify who you are? And one of the questions we also require is just for you to verify your bank account. So let me deal with that up front, because I think it's a really important piece. Globally, there are a lot of regulations to ensure that the financial platforms like our own do not contribute to terrorism financing or to money laundering. The first part of our journey, the KYC, Know Your Client, as it's known internationally, is where we just need to verify that you are who you say you are. This is an upload of a passport or an ID document or a driver's license, and it just enables us to say Linden Booth is actually Linden Booth. The second part is the bank details, and why do we need your bank details? When we pay money back, so if you've invested and you're getting interest or rent or dividends returned to you, we need to pay money back into your bank account. Now, the anti-money laundering regulations globally require that we can only pay money into a bank account that's in the same name as the identity that we have verified on the platform. So if you have loaded yourself up as Linden, but you're asking us to return your money into a bank account called John Smith, then we would not globally be allowed to do that. And it's the same as any financial platform around the world. So that's just why you need to complete your profile. We do have a section on our platform about a whole learning journey you can go on. If you're a startup investor and you need to learn, there's a whole bunch of resources in our resource section, and it connects you through to WealthE University, which will certainly give you a great step up and enable you to become a very proficient investor pretty quickly. Underneath that section are the deals currently on our platform. So as you can see, there are currently a deal out of the US. We have a deal in South Africa. We have a deal in the United Kingdom. We have these two deals in the US. The last two here, the Glenridge Medical 22 is fully funded. It is no longer open for investment. That deal completed last week. And similarly, this one in the UK also completed last week and is no longer open for investments. So we have those there. The reason they're there is they haven't fully closed yet. What that means is we've raised all the money, we've transferred the money to the sponsors, the people who are offering the deal, and they are now in the process of finalizing it. There might be a situation where one of our investors, for example, drops out, in which case we can just open it quickly to top up the amount that's missing. That's why they are still listed here on our marketplace. In terms of where we want to go, I think as per what Scott said, I think it'll be really useful, and we often get requests for us just to go through the current deals on the platform. So I will do that with pleasure. Starting here, if you're new to our platform and have not seen the way it works, it's very simple. Once you are in the marketplace, you can literally just click on any deal card that's interesting to you, and it will show you the more detail on the information. So you get, it tells you where the location is. It then gives you nice pictures, and you can scroll through all the pictures relating to that particular deal. You just literally click on the side, and as you go through the opportunities, as you go through the pictures, it will upload the new pictures for you into this visual space over here. The key to these deals is really in the finances. It's about the numbers. And I think Scott has mentioned to you some of the numbers. He mentioned some of the variables that you need to be paying attention to. We have great tool tips and educational pieces on the platform that will guide you if you need a lot more information on, for example, what is IRR or what is an equity multiple. It's certainly those tooltips that are on the platform will help you get up to date on that. I think, Scott, welcome back. I think what we should do is let's just chat about this particular deal, the Upside Avenue REIT that's out of the USA. This is a private REIT. So why we are excited about private REITs is that basically a private REIT is a real estate investment trust. So you are investing into a range of different real estate assets, different properties, but through one entity. So the exciting part about this is that you have diversified. When you do your investment, you're actually owning a piece of maybe 6 or 7 or 10 different buildings with a single investment. Why we like the private REITs is because they are not publicly listed on any stock exchange. And this is very important. Public REITs, when they are listed on stock exchanges, the value of your investment can change from day to day based on how the market in general is feeling. So if there is fears of a recession coming up soon and people are getting out of the stocks they own, then they can all sell they will sell or dump shares in publicly listed REITs. Even though the underlying value in the real estate hasn't changed, the value you own in terms of your shares has changed significantly because people are dumping them. Because private REITs are not listed, the price is always set based on the underlying value of the real estate. So private REITs are a great way to own a diversified portfolio easily through a single investment without the risks of the actual market. Scott, I don't know if you want to talk us through these numbers that we're seeing in front of you. Just give us your thoughts on the Upside Avenue deal.
Yeah, I think the most important thing is that you're dealing with some of the sectors that are very sustainable. So the bonus of this session is to talk about what do you do in a crash or an economic disruption and how do you actually deal with it. So you're dealing with a sector of the market in terms of student housing and multifamily, etc., where it's a much more sustainable sector of the market, through economic upheavals. And I think, Linda, what I'd like you to do is just talk through the little graph on the right there between the risks, so if you go down a bit, because it's in the top right corner at the moment, because I think it's really important that people understand the investment risk category on the right-hand side. The other thing I think, just before you go there, Lyndon, that I'd like to talk about is that we've had 6 exits for our investors. And actually, this group of people has had the most successful exit for any of our investors, where they got a substantial return. And one of the things that's important to understand is that as we go to this risk profile, is that you've got a difference between an income producing asset, which tends to be a core and a core plus, and then you've got more capital growth focused investments, which are value add and opportunistic. And the organization that's running this, the sponsor that's running this, in terms of a capital growth opportunity, there's actually some good videos which I'd highly recommend people look out for, that I did with a guy called Monty, that's the founder of this organization. And they've tended to want to focus in the past on value add and opportunistic opportunities, and that's how they got such a great exit for our investors in terms of a capital growth. But on this fund, they're focusing on income producing assets, which is really important. I don't know if you want to talk a little bit about the investment risk category, because it's really important for people to understand.
Yeah, great. Let me do that. So just to follow up on what you're saying, firstly, the internal rate of return here is 11.4%, and when we chat to Monty and the group behind this, their strategy at the moment is an annual growth of about 6% that comes back to you in actual cash on cash returns, and they are targeting 6% every year in terms of capital growth. So they're kind of sitting between the two. They're aware that investors are wanting cash back pretty quickly as soon as they've invested, and they also are wanting the capital growth. So their 12%, more or less 12% annual growth that they're projecting, comes from a mix between the two. In terms of the investment risk category, these are the standards that are applied throughout the industry, the real estate industry, in terms of evaluating risk. And I'll give you a very brief summary of the 4 of them. Core investments are normally investments in blue chip A-class environments. So, for example, something in Central City, New York, or Central City, London, where the building is built It does not need any additional repairs. It's in great shape, and it has an A-class tenant, a big corporate company or a very stable government agency, someone who has got a long-term lease. There's very little chance that they're going to default in terms of their payments, and the building itself is very solid. In this situation, because these buildings are so secure in terms of their return, the price you buy the building at is often at a premium, which means that the returns that you get are normally quite low in terms of the average. But as the graph says, there's very low risk, but your return can be slightly lower. The next category is Core Plus, where it's the same kind of model. It's a building that's already in place. It has tenants, but this might either it's not in the same central location, or the tenant might not be quite as blue chip as in a core. So while it's still a very secure investment, because there's slightly more risk, the price for the buildings up front will be slightly lower than if it was 100% core, which means the return based on how much you spent to buy the building will be slightly higher. That's why you've seen it's slightly higher returns, but the risk has moved up. The next two categories are really where you're into more of the not quite speculative, but a little bit more work to do in terms of the actual real estate investment firm that's managing it. A value add is where there is an existing building, and the real estate investment company that's going to buy or take over that building believes that they can improve the actual value of the investment, either by taking what is there in terms of tenants and over time improving the quality of your tenant and charging them more so that you're getting a greater return, or by changing how the building is being used. So if it's currently an office block, but they want to use it as a medical building and they think the returns will be better, then they will have a plan to do that. They believe that by doing the changes that they want to make, they will add to your income stream and therefore give you better returns on the price. So value adds do have a little bit more risk, because when people enter into that arrangement, those changes haven't happened yet. So you're going on the belief that those changes will improve your investment. And what's really core if you're entering into a value add opportunity is to make sure that you understand which investment, real estate investment company you're working with. Do they have the expertise in that sector? Have they done projects like this before that they can really demonstrate? And I think in terms of this particular deal we're looking at, we had a great conversation with this team as to whether this deal was core plus or value add. We kind of went between the two. In the end, they said that for the next few years, knowing that we have a bit of uncertainty in the global economic situation for the next few years, they would probably focus more on core plus opportunities than value add, though they do have a very strong record and background in value add, as Scott has mentioned. The last category here is opportunistic. Yeah, Scott, do you want to jump in before we head into
No, sorry, I thought you were finished. No, keep going.
Yeah, great. So opportunistic deals are deals where there's a huge amount of work to be done on a real estate project before you start seeing the return. And because of that amount of work, there's a lot more risk, there's a lot more uncertainty. As a result of that uncertainty, the price you can get into the opportunity, into the deal at a lower price, which means your returns are higher, but you are taking on that additional risk. These kind of opportunities are often developments from brand new when you're having to start from scratch. They might be where there is a building that is really falling down in terms of repair and maintenance, and they need to do major restructuring. Or it might be something where they take an existing building and completely changing its usage or its zoning to be something completely new. Once again, a much longer time period until your return is expected. You're not having a tenant who's moving in on day one and paying returns. Yeah, Scott, back to you. I think you wanted to add.
No, I think you've summed it up perfectly. What I'd like to do though is if we could move. So you've talked about the one deal. Let's move to the debt deal, the next one, just so that people can understand that.
Yeah, great. So this is an opportunity we've got currently in South Africa for South African investors, but it's a great story to tell because I think it's a fairly exciting opportunity in terms of how they've structured it. Let me just load it up for a second. Here we go. So this is the Southwark Village construction finance investment. brought to you by Opportunity Private Capital, a South African real estate development firm. This one is a very interesting deal. In what they do is they believe in, they understand that banks make a lot of money when banks finance particular investments. So they've developed a model for the private sector, and therefore they don't use banks at all. And if you have a look, and let me see if I can find it here on this, it's not on this particular page, but if you download their brochure, so that's an important thing just to add to let people know. On the actual page, you can download documentation for each deal. In this case, there are prospectuses as well as the summary of Opportunity Private Capital in general. So if you downloaded that, you could get full information. But what they've done is they have financed developments. They've broken up the financing of developments into two sections. The first piece is for the development of the basic infrastructure, the roads, building any walls around the building, putting in sewerage systems, the electricity systems. And then the second part, once that's completed, they pay everyone back their loan plus the interest on that. The second part is then the actual building from the ground up of the houses. Now, why this is an interesting model is it reduces your risk. So instead of having to be, if a development, for example, would take 2 years and you're having to put your money in for a 2-year period, for here you're going in literally for a year and a bit on the first one for the infrastructure. By the time you come in on the second financing, that part has already been done, it's been completed. If there were going to be any problems, they happened before you even got into the deal. And now they can ramp up using your finance very quickly to complete the investment. And that is why on the risk category, if you bear in mind what we said earlier, we've actually moved this the risk category down from opportunistic, because the timeline here, they've removed a significant portion of your risk if you are entering into the second part of their deal opportunities. And it sits in the value add. It's a 18% straight fixed interest return. That's 18% per annum. So the normal amount of time on this deal that your loan, your financing will be in on the deal is anywhere between 4 to 8 months. So absolutely, if you exit after 8 months, then they calculate what is the 18%, the equivalent of an 18% annual return for that 8 months, and that's what you get returned to you. Scott, I don't know if you want to add anything in particular on this deal.
I think two things that are important here. One is that they're taking a first mortgage out over the property, and in terms of the debt, so someone has the protection. And it was quite interesting in Mumbai last night. Someone, when I was talking about the equity side of things, they were like, no, they'd rather do debt because it's less risky, because effectively you take out the first mortgage. So just in terms of risk, a debt option can be lower risk because you take out the first mortgage over the property. You get the benefit of the predictability of the income. The only downside is you don't get the capital growth. But for those people that want a more consistent, predictable income that's less risk, then debt provides that solution. The other thing that I think is important is that from a debt perspective, is that it's becoming a trend around the world. So it's very popular in England at the moment. It's very popular in Australia. It's becoming more and more popular in America, and obviously now in South Africa as well, and other markets. Even talking to the Indian partners last night, it's becoming popular in India. And it's for the very reason I've just spoken about, in terms of there's two major trends happening around the world. Banks are not tending to lend in the property space that often anymore. And so private equity is coming in and filling that need, which is where the first mortgages and debt products are becoming available. And the second reason is that people as investors actually like the opportunity to be able to invest, but with lower risk threshold and more predictability. So I just wanted to sort of give some context to that. And it's certainly something that, as you said, Linden, this one is only available to South Africans, but we do have an eye on a few potential opportunities in other markets where we're wanting to bring debt deals from other markets as well, for the same reasons we just discussed.
Yeah, absolutely. And an interesting thing about this particular deal is that 18%, around the world, that's a remarkable return. And I think the Opportunity Private Capital have done their maths. They've developed a business model. They've tried and tested it. This is the 5th deal they're doing in the last 5 years where they can offer those returns. And they've proven it through these 5 deals, and everyone has paid out all the investors very successfully, that they can entice investors to come in without necessarily the advantage of that capital growth by putting up such a high return. So really exciting deal. We're very excited to have these guys on as our partners. So we move on to the next one. Fascinating opportunity. We're very excited to welcome RB Care Homes. This is their first opportunity, their first deal with us. We did the webinar with them yesterday. It was a really interesting conversation. We chatted to two of their team for a good 45 minutes. We will be sharing that webinar with everyone very shortly, so if you'd like to listen to it. But they really have a great business model that they're offering investors. The underlying principle here is they run care homes, aged care homes, specializing in the dementia space, so people with Alzheimer's or other forms of dementia. And what's really interesting about their business model is that the biggest tenant is the UK Health Authority. So in the UK, if you are not able to afford your own aged care, the UK Health Authority will place you into care homes. So their biggest tenants, about 80% of their rooms in the care home are actually funded and paid for by a state government. And that's a policy that's been in place for a long time, is highly unlikely to change. So if you remember back to when we were talking about risk categories, we spoke about the fact that you want an anchor tenant that is very secure, that's a regular payer, and that has very little risk. And that's what they've really cottoned onto in terms of their business model. So apart from having a very solid core tenant that pays 80% of their bills, the other thing that they do is they hold about 25% of the rooms in each of their care halls. They don't sell on to investors. And what they do is if one of their rooms go empty, then they take that hit. They take that hit out of their 25% and still continue to pay the 10% dividend that they pay on an annual basis. They pay quarterly, but it's fixed at 10%, so that even if there's one or two rooms that get empty, they take that hit and it doesn't affect your income. So your income is set at 10% a year. And once again, to get that kind of return out of the UK right now is phenomenal. The other exciting part about this deal is that it is guaranteed buyback. So at the end of the 3 years, they will guarantee that they will buy the deal, so investors know that there's a guaranteed exit here. There's no concern around whether there will be a market for the sale of the investment at the end of it. So we're very excited. You know, an established company. They manage 17 care homes. They are. It's a highly regulated environment. You know, when we did our due diligence on this group, one of the things we did was go to the healthcare websites that manage care homes in the UK, and we searched for all the different care homes. It's public information. You can go and see the independent regulator reports on each of the care homes, and we just did some due diligence, making sure that the reports on the care homes that RB Care Homes were running were up to scratch and of standard. So a great deal. We're excited to have it on board. Scott, do you want to add to that?
A couple of things. Yeah, I think a couple of things. You know, I've been investing in London since 2002, or in England since 2002, and everyone knows that we've got an affinity for medical and aged care. And if you take England, Clem Santa actually said England, well, actually the whole of the British Isles is like an old age home. All it needs to do is put a roof over the top of it, which Clem Santa talks about in the scenario planning. So one of the ways to make money in terms of property is to always look for long-term trends. And aged care, the baby boomers are all going into retirement now, and actually moving even beyond retirement into aged care facilities. And obviously in England you've got the NHS, which is the National Health Service, where they provide this. Now, one of the things that you mentioned, we did quite a lot of due diligence on this. I remember that both a business colleague of mine and a very good friend of mine were involved in a sector about 10 years ago when regulations changed, et cetera, and we actually went and asked them and understood how that worked, and to make sure that the due diligence in terms of this. And so I think one of the things, you talk a lot about tenants, it tends to be that if you're dealing with the British government or the American government or whatever, some people don't trust governments. but the bottom line is, from a stability perspective, and particularly when it's aged care, because that's also a politician's nightmare if it wasn't to go according to plan. It gives people quite a lot of peace of mind. The other thing that I think is quite relevant here, having invested in the UK for a very long time now, 10% cash on cash is unheard of. Unless you're going into very high risk, quite frankly, little crappy areas in northwest, England. And the reason that they're being able to get these cash-on-cash returns is obviously because it's in a medical, genre, and obviously because they've got the flexibility that you've already spoken about, Linden, which is where they're actually charging slightly higher rates than that, but they can create they can normalize it out to a 10% return, which is obviously significantly important for investors to understand. And then to reiterate what you said, I like the fact that there's a buyback in 3 years, so you're getting in. Any wise investor knows that you want to know what the exit strategy is as well.
Yep. Which is interesting, chatting to this team yesterday, is the amount that the UK Health Authority pays per room does not change whether you're in a home in London or whether you're a home in some other part of the UK. So if you want to make money and your costs of buying a home in London are far more than buying one outside of the UK, you're not going to make much money because the income's set, but your purchase price changes. So they're very clear. All their 17 homes are not in central London or places like that where the price is very expensive. But they are outside in other parts. They've got quite a few care homes in Wales where they can buy at a great price, but still get the same income as if they were running the same amount of rooms in the center of London. So a very smart team, very clever business model that certainly got it worked out. And we're very excited for this deal and ongoing deals. We will raise this deal as soon as we hit $500,000 into this deal from our investors, we will be closing that out. So this one is likely to close quickly as well. So we certainly encourage anyone who would be interested to jump on board this one. Once this is closed, we hope there will be another deal after that. We just can't guarantee how soon it will be, but certainly would like to encourage all our investors to get in and be a part of this one.
It's one thing, Linden, quite interesting enough, last night in Mumbai, someone came up to me and he said it's his dream to invest in England by 2025. And I said to him, well, if you go on the platform tomorrow, you can invest from $1,000. So he said, what do you mean? I said, no, you can literally go on, it's WealthE Wednesday, and you can invest in England from $1,000 and you can get a 10% cash on cash. And he was like, I don't understand. And his mindset was like, the only way to invest in England was to buy a house. And he'd set himself a goal for 6 years out. And I said, no, you can literally go on tomorrow and get started. And, for everyone that's on this webinar and or watching the recording, it's the same thing. People have dreamed of this stuff. And 10, 15 years ago, the only way to invest in England was to buy a little piece of land out in the middle of nowhere that was getting you no return. And now you can invest in an aged care facility earning you a 10% cash on cash return with an exit strategy. It's incredible how technology is empowering us now to get involved in good access to good partners with good deals, which I've already explained earlier.
Yeah, great, Scott. And this is for a lot of people wanting to invest in the UK, it was always buy to let. Buy a residential house, let it out, and that's how you make your money. What's exciting about this is it's still a buy to let model, but it's instead of having to deal with the ongoing problems and management hassles of managing a residential property where the tenants can come and go, you're doing a buy to let deal where there's no ongoing management that you have to do yourself. The tenants are secure and long term. They're solid. It's a great opportunity, and with returns much higher than you get on a residential buy to let. So once again, I agree with you 100%. Very exciting to have RB Care Homes on the platform at the moment. This is a fairly new release. It only came out a week ago in terms of being able to open to investments. We are expecting it to close quickly, so I do encourage people to get on. Moving on, the fourth one that's currently open for investment. I think it's actually almost fully closed. We're expecting to hear from the partner, Orbis Investments, either in the next few days. That this one might close very shortly. Is Meridian Medical 23. We have a long history of investing, of offering medical opportunities through the platform. I'll leave Scott to talk about that because he's been a major part over the last 4 or 5 years of driving the medical story and why it's such an exciting story. But just in terms of this deal, 11.4 IRR, it's a 5-year investment term, a very solid partner in Orbvest. You'll see the risk category here is Core Plus. It's a building that's already there, and good tenants, income from the beginning. Scott, do you want to tell us a little bit about the medical story and why Wealth Migrate is so excited about it?
Yeah, well, look, I mean, to be honest, I think the medical story and the aged care story is the same thing, because really there's, back to 2009 when it first sort of clicked for me, there's 3 reasons why we like medical. The first is that, no matter what happens in the global economy, people are always going to need doctors. they're always going to need aged care. And the point being is that, so therefore it doesn't fluctuate with economic cycles. The second thing is that they never leave. When you've got a medical premises or an aged care facility, they remain. That's where they are. And so you've got a very long-term tenant. And the third thing is that, I always tend to joke, but doctors are very good at being doctors, but they're not accountants, and neither are really, quite frankly, are health professionals. So you get great long-term tenants that with favorable leases. And those three reasons are the reasons that we've invested in medical. I've shown you tonight or today already the track record, and for me, medical is medical, aged care, that whole health space is one of the strongest sectors in the world, and it's been one of our core focuses over the last 5 years, and will continue to be. The one thing that we want to do is give people the diversification so that they can participate in medical in America and in the UK, hopefully soon in Australia as well, so that they can build a globalized portfolio in the sector that has been so kind to us over the last couple of years.
Yeah, great. So for all of those who are first-time investors, once you've come, had a look, chosen a deal that suits you and your particular risk and investment criteria, it's very easy to invest. You hit the invest in this deal button. It will ask you how much you are interested in investing. Once you've done that, you hit the next button. Let me just show you as an example. So I'll say, let's go with 10,000 US dollars into this particular deal. Sorry, I'm just going to have to go change that, 10, 2, 3. If I then click next, it asks me just to make sure that I understand what I'm doing. We certainly have our clients' interests at heart. We want to ensure that if you're investing with Wealth Migrate, that you understand what you're doing, that you're capable. At no point would we ever recommend someone make an investment that puts your ongoing daily lifestyle, your family at risk. So please do make sure you make responsible and well thought through investments. You click all of these to acknowledge that you have been able to do that. Then here are the agreements. When you say I agree, what you're agreeing to is actually our subscription agreement, and that you've understood the offer from the sponsor. And that's it. Once you click the next button, I agree, your investment in terms of the legals, the setting up of structures, the processes, it's all done. All that remains is for you to send through the money into an escrow account that gets provided. Once the investment is complete, it will show up in your portfolio. Let me just quickly go back and cancel this particular piece. And if you go back, once you've logged in onto the platform, this is a test portfolio, so you'll see it hasn't got anything in it at the moment. But what's interesting is last night on the RB Care Homes webinar, we showed people how to do investment, and it's sitting here under a pending investment. As soon as you have paid your money, it will show up. And over all your life cycle, your lifetime of investment from now onwards, all your deals, all your investments will show up in your portfolio page. Every time there are dividends paid, there will be a note against your portfolio page saying this amount was paid, and we'll tell you how much and where the money is being kept for you if you want to reinvest into the next one, or you can just withdraw it immediately into your bank account. So a very simple investment process. We've really used technology to make global real estate investing as simple as Scott always says, as a swipe of a finger. And that's really our commitment to make sure that that happens.
Awesome. Thank you very much, Linden. Can I steal back the screen?
Yeah, please do.
So we've been through the current deals. We've also been through the updated UX. There's been a lot of work happening behind the scenes in terms of from the UX side of things, so that we consistently are increasing and adding value to the customer experience. What I wanted to do is just talk to you a little bit around. Now, I am conscious of the fact that we're on the hour, and the focus for the lunchtime webinar is always to really focus on how do we operate as a company, why do we do what we do, and then the how and the what, and not to focus as much time on the bonus. And then this evening, when we do the webinar again, it'll be nearly midnight for me in Mumbai, but I'm going to spend a lot more time actually going through the bonus side of things and talking about it. So last month, if you didn't see the WealthE webinar, I'd recommend that you go and look at the bonus. We spoke a lot about Wealth 5.0 and how you can take advantage of the next decade and what is going to happen in terms of a lot of the big term global trends that are taking place and how you can really get involved in terms of where we're looking at. I wanted to share with you just some mistakes that people make. And as I said to you, I'm going to run through this very quickly now because I basically want to finish in less than 10 minutes so that we can close up nearly on the hour and we're going to answer anyone's questions. But in simple terms, the reason that the majority of people lose money when investing is that they make crisis investments. They don't have the right information. They've got the wrong partners. They don't understand the cash flow. They don't understand the after sales and the costs. And they also get caught up in this off-plan buying. You know, it's happening in Mumbai at the moment where, you know, go and buy a unit, you know, put down 10% deposit and don't worry, you're going to double your money. And, you know, when the market corrects, it's a fast way to lose money. The other thing that people do is they underestimate technology. You know, Linden, I think you've heard me tell the story where I was sitting on a plane next to a lady and she said to me, I know she buys shopping centers. And I said to her, well, that's really interesting. Are you not worried about e-commerce? And she said, no, it'll never come to Africa. Well, it was really interesting because just yesterday I was talking to people here in Mumbai, and the number one thing that people like to buy is retail shopping centers, which is fascinating for me because, as you can see on my screen here, retail shopping centers are going bankrupt all over America. And just last week, there was a report that came out that the top South African funds have invested in the largest property company in the UK that owns all the biggest shopping centers in the UK, and they just lost 30% of their value. And what's fascinating for me is that it's all the big financial industry, you know, companies that everyone understands that's invested in it. So it's not only the individual investors, but it's the institutional investors that are starting to get caught out in terms of some of these technology chains. And I tend to joke with people, but this was a picture that I took in the airport, and it seems to be that when it comes to trust, as long as you can pay for an ad in the airport, that's all that counts. In terms of, you know, local versus offshore, you know, I tend to joke with people, but, you know, investing locally is definitely, the returns are higher, it's definitely easier, but it doesn't provide people with peace of mind, you know, financial freedom or financial family planning, around hedge or diversification. And when one's looking at investing overseas, the problem is that your rand is getting weaker and your assets are getting more expensive, which really, you know, makes a challenge for people. And like many of the mistakes when people invest locally, you also have the problem of people, you know, making a lot of mistakes when they invest offshore. Now, I don't have time to go into all the different mistakes that people make, but we do have 3 white papers. And what we wanted to share with you was, with these white papers, was if you're a ranked beginner, we've got the 5 laws of building wealth through real estate. If you're an intermediate and you want to invest offshore, we've got the 5 keys to investing offshore. And if you're a super advanced, we've got the 4 ways to build a global portfolio. It's a white paper. We don't really care whether you want to invest with us or not, but what we do care about is that you've got the right information to make the right decisions so that you don't lose money. And as Nelson Mandela says, money won't create success, the freedom to make it will. And that's what we're trying to provide people with, the freedom to be able to do it. Now, I'm not going to talk about this. I'm going to go into this in a lot more detail tonight. You know, I've been through a couple of market crashes, and I'm going to share with you on the webinar tonight some of my personal experiences of what people can do in a market crash. And I'm going to use the examples of real life of what I've done between the different investments that I've looked at and where they've looked at. But as I said to you tonight, I will be going through these in a lot more detail. And so really the question that I've got for everyone is, what are you doing to become a global citizen? What are you doing that literally, as we go into this new decade, what are you doing to make sure that you're ready to be, you know, a global citizen? And the most important thing when it comes to being a global citizen is that it actually starts with your mindset. It starts with the ability to even be able to get involved. And, you know, Linden has shared with you today, you know, we've got WealthE Wednesday. You can literally go online. You can participate from $1,000 in multiple different deals, be they, you know, in England, America, even South Africa, where people can now participate in those deals. And the other thing that I think is critically important is that we've got our inner circle. You know, I've been doing these presentations, as I said to you, for the last 4 weeks, you know, all around the world. And what we're finding more and more is that people want to be part of something. They want to be part of a community. They want to learn and grow together, basically. And that's why we have our inner circle. And we also dropped our inner circle price down. So it's normally $250, but we've dropped it down to $99 for the year or $9 for the month, only on WealthE Wednesday. So for the ability to participate. And I tend to say to people, there's 5 reasons why people join the inner circle. The first is that you're only as good as the 5 people you hang around. And so this is about being in a like-minded community where you can grow and learn together. The second is that, you know, in the 20th century, it was all about learning and then going and doing. You'd go on a course and then you'd go and do it. You know, in the 21st century, it's all about learning while doing. And so learning while you're investing, you know, being part of a community and growing. The third is all about mentoring and coaching. You know, there's a fantastic analogy that if you want to be successful, you can go a hell of a lot faster if you go in a group. There's some great research that has come up by Deepak Chopra that if you want to do something on your own, you've got a less than 50% chance of succeeding. If you do something with a partner, you've got a 60% chance of succeeding. Whereas if you do something in a group with a like-minded group, you've got more than a 70% chance of succeeding. And I think that is critically important. The fourth one is compressing time. You know, if you take 1 hour today, we've been on a webinar, Linden and I have been through a lot of detail. We've gone into the different deals. It's about compressing your time, and we do that even more extensively. And the fifth one is about having the self-belief and ultimately being able to participate. As a gift for everyone that's on WealthE Wednesday, I'm going to put a link, and we've actually created an e-wealth pack now, and it's an online e-wealth pack. It's got over $5,000 worth of value, and you can go through and you can actually see here, you can get access to my book, you can get access to the investor test, to the micro degree, to the inner circle that we've discussed, to the different white papers that I've already mentioned. I get asked all the time about the different books and which ones we recommend, which we put here. We've got all the different resources and websites and courses and life hacks. So it's a huge amount of information. But what we've basically done is take 20 years and put it into literally a couple of pages. You know, I'm a big believer in life. It's always about trying to find a life hack. You know, there's you know, why reinvent the wheel? Why not copy other people in terms of, you know, being a lot more successful? So you should have that e-wealth pack. I've put it in the chat group for everyone to be able to get access to. And if you're watching the recording, it's wealthuniversity.org/e-wealth pack. And really, from my perspective, Linden, that's everything. As I said, I will go in a lot more detail on the bonus section this evening around how to survive, not only survive, but actually thrive in a global economic correction. But that wasn't the purpose of today. You know, we really wanted to share with people and give them as much value. They're very welcome to join us again this evening, where we'll go a lot deeper into it. But I wanted to see if there were any questions that we hadn't answered here in terms of, so one of the people asked, I would like to know the cost of frail care home investment opportunities in the UK post Wednesday's discount. So the normal minimum investment is $10,000. Is it $10,000 or pounds, Linden?
Yeah, $10,000. So that's a good point, Scott. Just quickly, we do use, you're about to go there, we do use dollars as our underlying currency in investments. So we raise the money in dollars, then on the day that we convert it into the investment, we translate it to pounds. And when you get your money back, we get the dividend in pounds, but we immediately convert it into dollars, so that there's a central currency that runs through the entire platform at any one time.
Cool. The next, sorry, and just in terms of that, is that obviously today with WealthE Wednesday, we drop it down to $1,000. Lorraine also asked the question, can I invest more than 1,000? You certainly can, Lorraine. I mean, we've had people invest, you know, over $1 million into the different deals. So it's just the minimum so that people can participate. But obviously, we have larger investors that invest, you know, hundreds of thousands of dollars or pounds into deals. So it's really what you feel comfortable with in terms of, you know, your own asset allocation. Hansa said, any news about the wallet? Will there be a solution before the first pilots are made? As discussed many times, this is very important. We completely agree with you, Hans. We're doing absolutely everything we can between Linden and Paul. We're working tirelessly on this. It has to do with the compliance and getting our compliance letters through, which we are literally very, very close to now getting sorted. But we completely agree with you. It is our #1 priority to get that done. Unfortunately, sometimes in life, these things are not 100% in your control, and you're at the mercy of a few others. So I don't know, Linden, if there's anything you want to add to that, but just wanted to reassure Hans and focus in terms of getting that done.
Yeah, no, if I've got these little grey spots on my beard, it's definitely related to the wallets. So it is something we're spending as much time as we possibly can. It is our #1 focus. We're aware of how important it is to both us and our investors.
Cool. And then will I post the recording of the webinar? Yes, I certainly will. And recording of tonight's webinar will do, definitely. where, as I said to you, I'll go into that in a lot more detail. So I just wanted to check if there were any other questions. I know, Lee, you've obviously been collecting questions. Is there anything else that I haven't answered, or any other traditional FAQs that people would like to know?
I think we've covered pretty much everything that was asked in this chat and our general FAQs. You covered all of that in our beginning intro. So you slammed them quite well this month, so thanks very much for that.
There's one question that I got asked on the Telegram group around when the WealthE coin is going onto an exchange. I have answered this a number of different times, and I did tell people that if they wanted to come to the webinar, I'd answer it. So for us, it's really important. We believe that the security token is where the world is going. We believe in the tokenization of real estate, which is why we went down the whole WealthE coin route. However, our advisor, who is David Alban, has told us that there's three things that we need to wait for. The first is that we need to wait for the regulations to be tight enough to be able to make the right decisions. The second is that we need to have the security exchanges established so that there is actually liquidity, etc., in them. And the third is that obviously with the volatility that happened in the crypto markets in 2018 and obviously going into 2019, we didn't and never intended to bring a volatile coin to the market, and therefore for the investors, we want to grandfather them into a security token, which will be backed by real estate once the regulation and the exchanges are ready. And then once we do that, we will effectively go to the exchange. Our intention with the WealthE coin was never to be a short-term solution. And so, for those investors that invested, it was always meant to be a buy and hold, just like property. And that's why it was meant to have not have the volatility of the typical crypto market. And that's why we're making the right decision to protect not only the investors, but also the, the volatility of the coin, and to do it right, and ultimately to deliver, which was always the long-term vision, which was to have a security-backed token. So if there's anyone that's joined us today that wanted to know that, then hopefully you've got a better insight into where the world is going, and more importantly, where we're going based on the regulation. But when people ask me about the timing, I think we originally said Q3 2018 because that was the original understanding, but obviously the regulation is moving a lot slower than we would like. And I actually can't tell people the timing because it's out of our control. It's when the regulations come through clearly. Linden, I'm not sure from your side, or Lee from your side, if there's anything else for this afternoon's webinar. And yeah, I'm not sure.
No, just from my side, to wish all our new investors who are literally joining us, and this is their first exposure to us, we really want to welcome you to the Wealth Migrate community. It's great to have you on board, and we're very excited for you as you start out on this global real estate investment journey, and look forward to being your partners.
Yeah, no, wonderful. I echo that, Linden. I think that's great, great insight. Lee, from your side?
Yeah, and from me, I'd like to echo what Linden said. We're very excited to have you on board. If you have any questions or need any help along the way, as I know that sometimes it can be confusing and you need some questions answered, please reach out to any one of us. We're here all the time to help you. We look forward to walking this journey with you.
Awesome. Well, thank you, Linden. Thank you, Lee. And I echo what both Linden and Lee have said. Welcome to everyone that's joined us on this webinar. I would have one request. A lot of time and effort into these webinars, and we obviously want to share as much value as possible. Our webinar system can take a lot of people. In fact, it can take up to 10,000 people. And so although we've got a great number of people from all over the world, which is really exciting for me, do me a favor and please share the link with your friends and family if you think this will add value to them. We will be going into more detail tonight in terms of how to not only survive an economic, I'm not going to say collapse, an economic disruption or world recession, and not only survive it, but actually thrive it. And if you think that what we've done this afternoon would add value to people, why not invite them along this evening, and let them be able to participate and learn and grow in terms of what we're doing. So that would be my real request to you. You can see all our contact details are there. Lee, who's as Linden's already said, is head of our community. She will be able to assist with anything. You can actually go online and sign up and get access to the different deals. As we said, if you're unsure on what next to do, well, I would certainly join the inner circle. At least join the global community. and we'll hold your hand. We'll go on a journey together. If you're ready and want to participate in the deals, you know, we specifically created WealthE Wednesday for people to drop those entries so that people could learn to participate. But certainly, if you're watching the recording, you can click on the links below. But from my perspective, I just wanted to say a huge thank you and acknowledgement to everyone. You know, I'm truly grateful that our global community continues to grow. We, you know, literally here in Mumbai, meeting with people and had a very lively event last night. And it's just amazing. You know, it's the most incredible thing. No matter where you go in the world, human needs do not change. And I think that is the thing that is the most important thing to remember, is that we all want the need to have our wealth protected. We all want to have plan Bs. We all want to have peace of mind. We all want to have the security to know that our cash is protected and that we're going to make a return. And what's really interesting is that technology is now allowing us to do that from around the world. And, you know, I tend to say we might all look a little bit different. We might all talk a little bit different, but our human needs don't change. And really what we're trying to do is solve a problem to help people, you know, solve their needs basically. And so hopefully tonight or today, sorry, I don't know what time zone I'm in at the moment. Hopefully today we've helped you, you know, solve some of those needs and some of those challenges that you've got. Anyway, that's all from me, and thank you to everyone. And yep, we might or might not see you online later. As I said, please let people know about it. And most importantly, I look forward to you taking involved in WealthE Wednesday, whether it's on the education side or the investment side, or if nothing else, join the conversation in the social media. Thank you very much, and good night.
Goodbye, everybody.